Hello traders, welcome to my channel, Sam Trading Strategies. Today, I'm excited to share a simple yet powerful pocket option trading strategy for the third candle. But wait, before you think it's the same as last week's strategy, let me tell you, it's not. Last week, we focused on trend continuation trading on the third candle. If you missed that, go check it out. It's an easy and effective method. Now, today's strategy is all about trend reversal trading on the third candle. So stick around, because this can make a big difference in your trading game. Before we dive in, a quick reminder. Trading binary options involves risk. You could lose your investment, and past performance doesn't guarantee future results. This video is for educational purposes only and is not financial advice. Always trade responsibly and only with money you can afford to lose. If you're new here, don't forget to hit the subscribe button and turn on notifications. This channel is packed with unique strategies you won't find anywhere else, and you don't want to miss them. All right, now let's jump straight into the strategy. This strategy focuses on analyzing the first two candles and then deciding whether to trade on the third candle. Here's how it works. For a buy trade, look for a weak bearish red candle as the first candle. If the second candle is a strong bearish red candle that's double the size of the first candle, or even larger, it's a setup for a trend reversal. On the third candle, place a buy trade. Why does this work? Often, when the first candle is weak and the second is strong, the trend tends to lose momentum. This creates a brief reversal that you can capitalize on. Remember, this works for short-term trades only. Don't use it for long-term trading. For a sell trade, look for a weak bullish green candle as the first candle. If the second candle is a strong bullish green candle that's double the size of the first candle or larger, it's a setup for a trend reversal. On the third candle, place a sell trade. Never trade against a strong trend. This strategy works best in non-trending or weekly trending markets. For this strategy, use a 1-minute time frame for the candles. Set your trade expiry to 1 minute as well. To master this strategy, watch the entire video because I'll show you live trades in different market conditions. Skipping ahead might cause you to miss crucial details that could make or break your trades. Now, let's jump into live trades to see this strategy in action. I'll guide you through each step, explaining why I'm entering trades and how you can replicate this approach. Here, I've taken a buy trade as per our strategy. Let me explain why. The first candle is a weak bearish candle, and the second candle is a strong bearish candle, almost 3 times larger than the first. This indicates that the market might lose its downward momentum and a reversal could be on the way. But here's the twist. This trade is against the current trend, which is a downtrend. So why did I take it? Let me break it down. A downtrend doesn't move in a straight line with continuous bearish candles. It always includes retracements, where 1 or 2 bullish candles appear before the trend resumes. If you look closely at the chart, buyers have stepped in 5 times during this downtrend. This is the key. You don't fight the trend, you time your entry at these retracement points. Today, our strategy helps us pinpoint exactly where to enter. Now, we wait for the result. And there it is. As predicted, the market reversed for a brief retracement, and our buy trade closed successfully. This is why I love this strategy. It's based on market behavior and logical patterns. It's simple, effective, and easy to learn with practice. If you follow the steps and stay disciplined, you can improve your trading decisions and build confidence in your trades. Here's why I've taken a buy trade as per our strategy. The first candle is a weak bearish candle, and the second candle is a strong bearish candle, almost 3 times larger than the first. This is a classic setup for a potential trend reversal, as per our strategy. Now, all we need to do is wait for the trade to play out. While we're waiting, let me remind you of an important principle. Stick to the strategy. Don't second-guess your decision once you've entered a trade. Be patient. Let the market do its thing. There's no need to rush or panic. The market is moving just as expected. Look at how the price is pulling back after that strong second candle. This is why it's so important to follow a structured plan. Trading becomes less about guessing and more about understanding market behavior. And there you have it. The trade closed successfully, just as our strategy predicted. The market reversed briefly, and we captured that move. I've taken a buy trade here as per my strategy, and let me explain why this setup is so promising. The first candle is a weak bearish candle, followed by a strong bearish candle that's nearly twice the size of the first. This pattern suggests a potential reversal. But here's the exciting part. This trade is even stronger because the price is currently at a key support level, where 3 candles ago, we saw a strong bullish candle. This makes the setup even more reliable for a buy trade. Support levels act like stepping stones for the market. When the price reaches these levels, it often bounces back, especially when combined with a pattern like this. The presence of that previous bullish candle gives us extra confirmation that buyers are likely to step in again here. The price is reacting exactly as expected. Notice how the support level is acting as a launchpad, pushing the price upward after that strong second candle. And there we go. The trade closed successfully. The market reversed at the support level, just as we anticipated. This is why it's so important to align your strategy with key market structures, like support and resistance. Here, I've taken a buy trade as per my strategy, and let me walk you through why this setup is so promising. The first candle is a weak bearish candle, followed by a strong bearish candle. This second candle is more than 3 times the size of the first. This pattern strongly suggests that the market might be losing bearish momentum and is ready for a reversal. Now here's the best part. The market is currently in an uptrend. This makes the setup even stronger because, in an uptrend, the market naturally tends to favor bullish moves. The strong trend acts like a tailwind, increasing the likelihood of this buy trade succeeding. When you combine a clear trend with a reversal pattern, it creates a high-confidence trade. The price is moving exactly as we predicted. This is why understanding market trends and patterns is so important. Look at how the uptrend is supporting this reversal. It's like the market is working in our favor. And there it is, the trade closed successfully. The market followed the uptrend, and the reversal happened right on cue. This is a perfect example of how powerful this strategy can be when combined with a strong trend. Trading doesn't have to be complicated. When you understand key patterns and align them with the trend, you set yourself up for success. I've placed a sell trade here as per my strategy, and let me explain why this setup looks so strong. The first candle is a very weak bullish candle, followed by a very strong bullish candle. This second candle is significantly larger than the first. This kind of pattern often signals that the market may lose its momentum, especially at key levels. Now, here's what makes this setup even more powerful. The market is currently in an uptrend, but the price has reached a resistance level. Resistance levels act as barriers where the price often struggles to move higher. When combined with the candlestick pattern we're seeing here, it increases the likelihood of a short-term reversal. This is the perfect spot for a sell trade. Look at that! The price is reversing exactly as expected. This is why understanding the combination of candlestick patterns and market structure is so powerful. The resistance level has done its job, and the market is now moving in our favor. And there we have it. The trade closed successfully. The market respected the resistance level, and the reversal happened just as our strategy predicted. This is why I love this strategy. It's simple, logical, and effective. By identifying patterns and combining them with key levels like resistance, you can increase the accuracy of your trades. If you found this strategy helpful, here's what you can do to support the channel. Like this video if you enjoyed it. It really helps me out. Subscribe to the channel and turn on the notification bell to stay updated with more powerful trading strategies. Share your thoughts, questions, or feedback in the comment section below. I'd love to hear from you and help you on your trading journey. Thank you for watching Sam Trading Strategies. Remember, trading is about practice, patience, and following a clear plan. Stay disciplined, keep learning, and always trade responsibly. See you in the next video. Happy trading!